Ladies and gentlemen, good day and welcome to Max India Limited Q3 FY2024 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajiv Mehta, Managing Director. Thank you and over to you.
Thank you very much and a warm welcome. Good evening. On behalf of Max India Limited, welcome to this Q3 FY24 earnings call. For the benefit of people who are joining us first time, I have with me my colleagues Ajay Agarwal, Deputy CEO and CFO for Antara Senior Living Limited. He also spearheads the investor relations of the company. Ishan Khanna, CEO for Antara Assisted Care. Sandeep Pathak, CFO for Max India, Ankit Kalra, CFO for Antara Assisted Care, Nishan from the Investor Relations team, and SGA, our Investor Relations advisors. I am sure you would have seen the investor deck that we already uploaded and given to the exchanges as well. I hope you have had the opportunity to peruse that deck. But let me start by giving a summary of our performance in Q3. First of all, very, very pleased to share with you that Antara Senior Care has been certified by Great Places to Work. This is an exercise they do with over 5,000 companies who apply and only 250 get certified. And then they do the ranking, later. So it's a big milestone. We are still an early stage organization, so we are very happy that some of the good work that we do to build our culture, to have the right set of employees, serve our, seniors and our customers, is paying rich dividends. So we have the certification from Great Places to Work. On the residency side, I'm pleased to inform you that 100% of our inventory has been sold out in June. There was one unit which got sold in Jan 24, and 189 apartments of the 197 have already been handed over. So it's a vibrant, buzzing community with over 160-70 people staying there, and is also reflecting both in our resident satisfaction scores, which continue to be as high as 88%, and also the community is PBT and cash positive with a surplus of 125 crores as of December 23. On the Noida side, all inventories were sold out in March 23. Construction work is on track for all the 3 towers, and now finishing and interiors work is underway. We are confident we'll complete construction of phase 1 as planned. Project completion expected by March 25. For phase 2, we are in talks with RERA for necessary approvals. For the new geographies, the definitive agreement has been executed for Gurgaon. The marketing, designing and marketing strategy have also been finalized. This is our first attempt at an intergenerational project in which we'll have about 290-300 units of senior living with 0.72 million square feet. For Bangalore, we have closed the terms for definitive agreement and are waiting for some final clearances. However, in the interest of time, we have already submitted the development plans with the authorities. This is a 1.08 million square feet development with about 544 units. For Hyderabad, we have executed the term sheet. Currently, diligence is on, and in the next 1 month or so, hopefully, we'll close that as well. This will be the largest development for Antara, with about 748 units in 2 phases, about 1.3 million square feet. For other geographies of Chandigarh, Goa, Pune, active dialogue is on with landowners, and hopefully we should be able to close something in the next few months. Our target, as we told you last time also, it's in the deck as well, is to do 1.5 million square feet of development every year. On Antara Assisted Care Services, we have 68 beds operational in Gurgaon. We have finalized 2 care homes comprising 83 beds in Bannerghatta Road, Bangalore, and 60 beds in Noida, for which fit-outs are underway and expected to be operationalized by March 24. So by FY24, we'll have about 210 beds. If you recall, I've been saying 360 beds. So the other beds we've been able to identify. We have done the letter of, intent with the landlord, just that the fit-outs are taking a quarter more. Otherwise, we are well on track for that. We have 85 beds in Whitefield, Bangalore, 80 beds in Chennai, 102 beds in Gurgaon, and 100 beds in Hyderabad. So there will be much more than 360 beds, about 700 or so by the year in FY25. For the 360, the gap is just a quarter. We have the beds, we have the LOI, it's just the fit-outs are taking a little more time. On care at home, we have touched about 13,000 lives since inception. Most of the revenue comes to us from critical care, physiotherapy, and diagnostics and caregivers. We started operations in Bangalore and Chennai in the last quarter, and we're now preparing for launch in Q1 FY25 in Hyderabad. On Medcare, we have 800 plus SKUs, which include Antara labeled products, both for sales and rental. So far, we have sold about 4,500 packs of adult diapers to retail channel on Amazon. Our walkers are now the 6th bestseller on Amazon, with about 1,000 units sold. On average, we sell about 15 to 20 per day. During Q3 FY24, we launched new products like smart beds, S-shaped walkers, bed wipes, underpads, and air mattresses. We are preparing to launch Medcare products in Chennai by Q4 FY24. AGZ, which was our digital platform for helping seniors look at self-care protocols for chronic diseases, which has expert-assisted products and solutions, so the seniors can age with relief, with ease and joy. We have launched the first 2 chronic conditions of knee pain and fall protection. 17 products have been launched across 2 chronic conditions. Braces and pain relief products have received very good response in the marketplace. Obviously, in a new venture, you get learnings, which we are now looking at to be able to improve our trajectory going forward. We already have 3 health studios, which are our physical spaces that seniors can walk in and seek expert consultation. They're operational in Delhi, Gurugram, and Bangalore. And work has been initiated now for the launch of next chronic conditions, hearing aids, respiratory ailments, and diabetes, which are planned in FY25. Now, coming to financial performance for Q3 FY24, on a consolidated basis, we achieved revenues of 45 crores, which is down 3%. As explained earlier, this is primarily because we don't have any more inventory to sell. As we launch Gurgaon, Bangalore, and Hyderabad, this gap will get closed. It's purely temporary. On consolidated EBITDA basis, the loss is 13 crores, as against a marginal gain of 0.1 crores in Q3 FY23. Again, the reason is dip in revenues because of no inventory to sell, but also because we're spending now or investing in new businesses in scale-up. That's why the expenses are going up. This EBITDA trend will continue to be in similar trend for a couple of quarters as we make the investment in strategic growth initiatives. But treasury and other assets stand at 500 crores as of December 23. Very strong balance sheet position with consolidated net worth of 513 crores as of December 23 end. On the residences side, cumulative inception to date, the sales collection therein stands at 676 crores as against 615 crores in December 22, which is a 10% growth. In Noida Phase 1, we have a cumulative ITD collection of 334 crores, which is about a 58% growth over last year, and a collection efficiency of 98%. In terms of construction, all on track, already completed block work for all the 3 towers, and now finishing and interiors are underway. On Antara Assisted Care, overall net revenue increased by 56% to 7 crores in Q3 FY24 from 4.5 crores in Q3 FY23. The care homes net revenue stood at 1.5 crores in Q3 FY24, grew by 28% year-on-year. Adjusting for revenue of inoperative care homes, as I shared last time, some of the operator models we had tried didn't work, so that those care homes we had to shut down. The contribution margin improved from -5% to -5% from -6%, adjusting the cost for inoperative care homes. In the Gurugram care home, which is the one model which has been steady, which is a proof of success, the margins have improved sharply from -1% in Q2 FY24 to 12% in Q3 FY24. And hopefully, as we ramp up the occupancy from the current 58%, the margins will tend to go to the number we have already stated in our earlier calls. On the care at home vertical, this vertical has done very well. We achieved the highest ever net revenue of rupees 2.5 crores in Q3 FY24, which grew by 45% over Q3 FY23, led by high margin service offerings and expansion to new geographies, particularly Bangalore and Chennai. The contribution margin also improved to 15% in Q3 FY24 from 14% in Q3 FY23. On Medcare, we have also achieved the highest ever net revenue of 2.1 crores in Q3 FY24. It's a growth of 170% year-on-year. The contribution margin at -5% is impacted by a shift in channel mix from B2C to B2B and sale of some old inventory that we have bought during COVID times. But this mix should stabilize in the quarters to come, and a steady contribution margin will be achieved as we start to do more and more private label products. On Age Easy, which was launched on Ender's Day as promised, August 21, 2023, has been only a few months. The net revenue is already scaled up to 1 crore in Q3 FY24 from a meager 0.1 crore in Q3 FY24, and we are ahead of plan on this one. In Antara Assisted Care, our customer satisfaction scores continue to be healthy, 94% across all verticals, 93% for care homes, 94% for care at home, and 95% for Medcare. 61% NPS score for Age Easy and 70% renewals, which is a proof of belief that customers have in our service and products. If you look at Dehradun, 40% of our sales came through resident referrals. Again, a vindication of how customers believe in this brand. Some of you who have joined the call for the first time, I just want to reiterate, we are the only organized brand in India trying to create an integrated care ecosystem for seniors. We have 5 business verticals: independent residence for seniors who are healthy but want to stay in a safe and secure community, assisted living or care home for seniors who need more immersive and interventions or help. Either they've gone through a medical, episode or can't be taken, care at home. And memory care meant for seniors who have neuro disorders like Alzheimer's, Parkinson's, dementia. We also have care at home services, which is critical care, diagnostics, x-rays, caregivers at home, pathology. And if seniors require products for their convenience or recovery from mobility, wheelchairs, commode chairs, diapers, walkers, walking stick, hospital beds that we have through our Medcare vertical. And the latest digital platform, Age Easy, which is a platform meant to address chronic conditions and empower the seniors with self-care protocols through a combination of solution-led advice, combination of products and services. That's what Age Easy attempts to do. Currently, we're getting very good traction. The seniors can approach us through our physical spaces, through WhatsApp video call, or call an expert at home. The market size continues to grow. Besides the $10 to $12 billion in the senior care space, the Age Easy market size itself is an additional 40,000 crores. And I'm only talking of the top 30 cities in Sec A and Sec B. So it's a large growing market. To summarize, in Antara Assisted Care, we have served so far over 18,000 patients. On medical equipment side, about 800 SKUs. So hopefully in the next 5 to 7 years, the promise we have made that we will have 8 to 10 cities for our communities, 4 to 5,000 units of senior living, about 1,500, 2,000 beds of care homes, memory care homes, 45 to 50 health studios for both physical presence and online presence across North, West and South cluster. Our focus is 4 million customers, household income, 15 lakh and above, Sec A and Sec B, and residents staying in our communities. So that's the Antara story so far. That's our progress we have made. Quite happy with the quarter, very focused on executing. We have to build scale as we go along and some of the feedback that you've given us in the past, and hopefully should be able to meet all our commitments that we make to you people. So I'll stop here. Welcome any questions.
Thank you very much. We will now begin the question and answer session. Participants are requested. Participants present on the audio bridge who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Ranudeep from Mars Capital. Please go ahead.
Yeah, thank you for the opportunity and great set of numbers. Congratulations on that. So we've seen a 64% year-on-year growth in the patients served and 45% year-on-year growth in revenue for the care at homes vertical. So what are the early trends that you're seeing in this vertical? And if you can also share that we've seen a run rate of 2.5 CR. What are the projections by when do we see this doubling? If you can just guide on in terms of the timeline for this.
The if I understand your question, you're talking about the growth in care at home, what is driving it, and what are the future projections when it will double. Am I right?
Correct, sir.
Yeah. So I think care at home has been a good story for us. As I've been saying, we focus on high margin services and customer experience. And it's a good entry strategy for any new geography for us as well. And that is now the reality experience is turning out to be exactly what we had thought. It's a healthy contribution margin business, very focused on productivity and utilization of resources that we have. And since we have, our residents in Dehradun who also utilize these services, people in care homes also utilize these services, and we're able to have synergies in the manpower that we deploy in care home. That is why the contribution margin, with a combination of focusing on high margin services, standing out. Difficult for me to comment when it will double. It's a forward-looking statement. But in the prospective plan for FY25, we should be able to look at numbers in line with what you're saying.
Okay. Thank you. Thank you for that. So my next question was, we usually target the top 2% of our target addressable market. Ideally, they're the ones with high disposable income, right? So if I marry this fact to the recent surge in Gurgaon and Noida real estate prices, so are we looking at an aggressive pricing strategy for our phase 2 at Noida?
Ideally, yes. Why would we say no to that, to be honest? And we're also looking at, aggressive pricing for Gurgaon because you're right, the market is doing well, but we are very wedded to product to market fit. So we do a lot of research and study on what prices the seniors can afford, what is the market price, and we make sure we are priced appropriately. But needless to say, as you said, the market is buoyant at this point of time, and we will take full advantage of it.
Okay. So my last question, sir, we've seen a massive investment into the silver economy in China. And we are aware that India is maybe a decade behind China in terms of the demographics, right? Where we see the silver tsunami hitting India too. So what's your projections in terms of, do you see similar investment and especially government initiatives, do you see coming in the next few years, and that in turn impacting our company?
I think there's clearly a sector which will see an upward trend in the next 10 years. I mean, we are getting there in terms of demographics. There is now attention being paid. I can give you a few proof points of direction in which the government and the private players are thinking. So if you look at the government side, Healthcare Sector Council is now taking out standards for care at home. NABH declared the first, draft standard for care homes. We are seeing now money raised by different players of different sizes, from $4 million to $35 million, fundraisers happening. There are partnerships being looked at. The government is setting up committees to look at this sector. Advisory Council has been set up in Uttar Pradesh already, which I am part of. As an association for senior living, which is an association for, voluntary association represents the industry, we have taken out a checklist for residences for seniors along with Grant Thornton, so we're able to audit all facilities. So I think everything is pointing in the right direction in terms of A, attention from the government, B, the market picking up, investor interest flowing in, and slowly some kind of structure policy. If you read the paper, Maharashtra announced yesterday under RERA the minimum standards for senior living. So I think things are starting to get together. It's a 10-year play, I must admit. It's not something which will phenomenally change the next 2 years, but it's a long growth sector. It's much like what insurance was in 2000.
Appreciate your answer, sir, and wishing you all the best for the next quarter. Thank you.
Thank you.
Thank you. The next question is from the line of Harsh Kundani from Inos Alpha Investment. Please go ahead.
Hi, thanks for this opportunity. 3 questions from my end. Firstly, on Medcare and care at home. If you can just help me explain where this growth is coming from. Is it mostly the in-house customers or the external customers that is leading to this kind of a growth? Second, on EGZ, if you could just help us with the contribution margin, and if there is any other capital that would be deployed in the additional conditions that you guys have mentioned in the PPT, which is this hearing loss and a couple of others that you've mentioned. Lastly, what explains this sharp jump in other expenses on a quarter-on-quarter and YOY basis?
On a consol basis, you mean? On a consol basis?
Sorry?
You're referring to expenses on a consol basis?
Yes, on the consol basis.
Okay. So let me address those questions. On the Medcare and the care at home, the growth is coming from new customers. Because if you look at, we only have one community in Dehradun and 68 beds operational. As these beds in the communities increase, that contribution increase. Currently is coming from new customers. Also starting to come from new geographies, because we are finding the response in Bangalore, Chennai to be far stronger than North. Perhaps it's a more mature market, so it's coming from there. Medcare, in any case, we are listed on the marketplace as well as an offline channel, right? So that is also causing, the spurt that we saw in the B2B channel, which also impacted the contribution margin in Medcare negatively, is something that we will wind down over a period of time as our other channels pick up, because we do want to have healthy contribution margin on this side. Also, we're increasing our proportion of private label products, which will then push the margin up. So that's the question on growth. The second question was about agency contribution. Well, it's too early for us to comment on contribution. It's a 4 or 5 month old business. We are more focused on metrics like repeat customers, NPS, revenue coming through that. We have allocated separate capital, for that. But the gross margins are quite good at this point of time, right? But as we build the business, the contribution profile, will become clearer. But as I said, for any new digital e-commerce kind of business to have a run rate of 1 crore in 3 months is quite commendable. And that we've been able to achieve. But as we launch more disease conditions, so we have separate capital allocated. I think in FY2024, total capital spend will be on AGZ about 43 crores will be on AGZ. And we are working out the plans for next year, so we'll be able to share more about that, in the next quarter. Other expenses. Let's talk about other expenses. So those include, the launch of AGZ business. So I guess that's why we're seeing the ballooning, essentially because of that.
So basically, if there are three vectors of expenses which is coming in the console, which is basically the residences and Antara Assisted Care Main and AGZ. As you know that Antara Assisted Care and AGZ both are in the expansion and growth mode. So there the additional cost is coming so predominantly it is led by the marketing expenses and pretty much same as the business.
Got it. Thanks a lot and all the best.
Thank you.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Parth Vasani from KK Advisors. Please go ahead.
Hello, sir. Good evening, and thank you for the opportunity. Sir, I had a couple of questions. First one was on care homes facility. So I just wanted to know what is the criteria in terms of payback, ROCE, and returns for care home facilities.
You will say all the questions first and then we answer, or you want to go question answer type?
Yeah, sir. I can ask the next question later. I mean, you can answer this.
Okay, so I will probably break the answer into a couple of points. This is Ishan here. Our care homes break even at contribution level in 4 quarters or at around 45% occupancy. We start seeing a 20% plus contribution margin at around 70% occupancy, which we timeline to around 8 quarters. Steady state IRR and ROCE would be over 20%. Does that answer your question?
Yes. It was very helpful. Sir, and the second question, I just wanted to know what is the competitive edge that Antara holds? I mean, basically, what is the learning curve in terms of time, in terms of cost and execution challenges which new entrants face who are trying to compete with Entra?
If we talk about the entire business, there are 2 or 3 edges that we have. One, we have pioneered, senior care. So we have done all our learnings on residences for seniors, on care homes, etc. We are the only branded player trying to construct an integrated care ecosystem. So after a while, just imagine when you have, 10,000 seniors staying in the 5,000 apartments, people staying in care homes, they are actually your captive customers for all your services and products. Given our legacy, we understand healthcare, we understand real estate, we understand, hospitality, and we understand insurance. And that gives us a unique capability to be able to stitch together. Other players who are doing residences for seniors are perhaps outsourcing healthcare services somewhere else. We don't need to. We understand that game fully. So that gives us a unique advantage in the marketplace and a high barrier to entry. So having learned the business, being the early pioneers, built a very strong brand, across, and the ability and the competencies required to be able to stitch together, the solution. The talent that we have onboarded, so for example, for the Age Easy, which is more an e-commerce kind of play, we have, people from Pristine, people from Amazon. Ishan Khanna, who leads the business, comes from lifestyle and diagnostics. So we have onboarded the right talent as well to be able to support the business. So that gives us the advantage over others.
Got it, sir. Sounds great. Thank you very much for the detailed answer. That is it from my side. Thank you.
Okay.
Thank you. A reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Aditi Sawant from ADM Advisors. Please go ahead.
Yeah, hi. Thank you so much for the opportunity. The first question is, can you please share the details on the customer inquiries made for the Noida Phase 2 project, and what will be the price per square foot?
So if the question is that do we have enough queries for Phase 2, the answer is yes. We have a wait list actually for Phase 2, and we'll price it accordingly based on the market price and what we can command as a premium. At this point of time, difficult for us to make a comment which is future, forward-looking, but it will be appropriately priced. Just to give you the data of the past, we had launched about 6,500-7,000 box price for Phase 1, but the last price that we could command was about 12,000. So that gives you an idea of how the market has moved.
Okay. And can you just share any brief, brief on like portion of repeat customers for our care homes and care at homes?
So,
if you look at our total base for care at home, 50% of our total revenue is contributed by renewal, which basically depends also service size on the A-loss or the average length of stay of the service that we have. So some nursing caregivers, patient caregivers, etc., which are higher A-loss. So the renewal base keeps building up accordingly. If you look at AGC, which is our new business, the digital business, we've had 1,200 repeat customers in the 4 months post-launch. So we see a very high repeatability, if I can say so, in both our businesses.
Okay, got it. Just one last question. Like, what is the peak revenue that can be achieved after 5 to 7 senior living communities are fully operational?
Yeah. So typically, in any project for senior living, we get revenues to 3 ways. We get a revenue by a DMP that we get, which is 8.5-9% of the top line. We get a share in profits in proportion to the equity that we invest, and then the annuity income belongs to us. So typically, in a 250-300 unit facility, about 10 to 11 crores is the total revenue for the year, split into 60% will be common area maintenance, 40% will be other services seniors consume. That's typical, but the actual numbers Ajay will share.
So, I want to say about the annuity as well as the income from the residences as a DMP and the share of profit. By financial year 29, we should be achieving a turnover top line of approximately 750 to 850 crores.
Okay, got it. That's it from my end. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Y Mehta from AP Capital. Please go ahead.
Hello, am I audible?
Yes, please.
I just have a couple of questions. So we understand that there is a huge untapped market. Can you please share specific customer acquisition strategies that have been implemented?
So it depends on which product or which vertical you're talking about. So residences for seniors, we do a fair bit of, go-to-market in terms of ATL. But as the community, matures, we get a fair bit of referrals from existing, people who have bought. We do a lot of digital as well, on this residency side. On care homes, care at home, Medcare and AGC, depends really on the vertical, but Ishan can embellish that answer.
So if I look at our care home business, actually if I look at all the assisted care business lines, there's a fair share of combination of marketing that we do online or digital in nature, which comes through all the social media promotions, performance marketing, etc. And we get a lot of our high ALOS services with that. We also have built a strong referral channel through hospitals and doctors that give us leads for all of our services. Coming to AGV, it's largely a digital-driven channel because we want to source our customers from across the country because our services and tele-consultations happen across the country. So it's primarily digitally driven, but we have also recently started working with resident welfare associations and corporates as well because we feel there's a large value to be driven from there as well. Hope that answers your question.
Okay, sir. Firstly, sir, what are the key metrics that we are targeting for FY25? And also, please, if you would share expected top line and bottom line expectation based on targets for FY25.
So, FY25 will be difficult for us to give a forward-looking statement as a process what we have been following. But our deck very clearly explains what aspirations we are having for more care homes, more residences, and then what has to draw its own lines.
Perfect, sir. Thank you. That's all from us.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. As that was the last question, I would now hand the conference over to Mr. Rajat Mehta for closing comments.
Thank you very much for all your questions. I really appreciate. As I said, we are well on our way to execute the strategy as we had, envisaged. The bed capacity that we wanted to build is already in sight. We have entered new cities like Chennai and Bangalore and preparing for Hyderabad. The definitive, or the term sheets have been signed for residences for Gurugram, for Bangalore and Hyderabad. And we are looking at opportunities in other cities as well. So our ambition of creating 8 to 10 communities across top 5 to 7 cities in India, looking at about 1,500 to 2,000 beds for care homes, a robust care at home and Medcare business, and the latest kid on the block, AGZ, to be able to launch, in 8 to 10 cities. In physical presence, though the digital presence is agnostic in terms of geography. Very healthy NPS or customer satisfaction scores, which is what will drive future business, as is evident through resident referrals as well as the repeat customers we have in AGC and renewals in care homes and care at home. And extremely pleased to get the Great Places to Work certification. It's a great vindication of the culture and values to be able to build a strong culture to serve our customers well. So mighty pleased with the performance in the quarter. There's consistent growth. I look forward to these trends playing out long term, as well. Thank you for your support. Really appreciate it. Thank you.
Thank you. On behalf of Max India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.